Hi, and welcome to this edition of Ask Bahar. I'm Bahar Saadat, and joining me today is one of the partners from Davidson Company, Erez Bahar. Erez, one of our questions from our viewing audience today is, what are convertible debentures? Now, as I understand them, it's just like any other debt, but there's an option to purchase company stock at the end of it if you so choose. Is that correct?
Yeah, that's right. So the concept of the convertible debt is that it's just like any other debt. You know, you've got maturity, you've got a face amount, you've got a stipulated interest rate, but most of the time, at the option of the holder, you could convert that debt into stock of the company.
Now, under what kind of circumstances would somebody want to do that?
So if a company stock goes up, right, let's say your conversion price is $1 a share per dollar of debt, and the price of the company stock in 2 years' time is $3, then I'd look at you and go, hey, let's convert because I can just sell your stock at $3. Now, instead, I could opt to hold on, but then that just means I get my debt repaid. So depending on what happens to the company stock, most holder will decide accordingly.
Now, on some financial statements, I've actually seen, say $1 million convertible debt note. And it'll be $900,000 under debt and then $100,000 under equity.
Wow.
Oh, can you explain that for us?
Yeah,
please?
that's the terminology we use for bifurcation, right? And where we divvy up the value of the debt versus the value of the equity. So it's sort of like saying, what would you rather have? Just the debt or the option to convert to equity? Most people would agree that you want that equity push. So there is value there. So we bifurcate the two into two pieces in the financial statements.
Okay, now I've also heard the term accretion thrown around right, left, and center. What's that all about?
Yeah, so a lot of our clients, they'll look at the financial statements and the balance sheet and they see this debt. So let's say you loan me $1 million and the debt will be at $900,000. So they go, what is that? Well, accretion is the terminology that we use in order to accrete the debt back up to $1 million. So effectively that means that over the term of the debt, you're going to incur additional accretion expense.
Can you trifurcate?
Yeah, you could trifurcate, Bahar, sure.
Could you quadrifurcate?
Yeah, you want to trifurcate, quadrifurcate, you can.
What's Latin for 5?
Cinco de Mayo.
That's what I'm talking about. All right, thanks everyone for joining us today. I'm Bahar Saadat. Any audit or accounting questions can be forwarded to askbahar@davidson-co.com. Signing out, again, I'm Bahar Saadat and Erez Bahar. Thank you so much for joining us.
Thanks, Bahar.